And welcome back to another episode of Carman Conversations. And this episode, episode 2, is around guaranteed future value. And as always, I'm joined by Taylor. Timmy, the hard-hitting questions around guaranteed future value. Welcome, Taylor.
Thank you. I'm excited for this one. Guaranteed future value, it's a very exciting prospect. I heard a bit about it just before in our episode prior, but I thought we could delve a lot deeper.
Absolutely.
Yeah. So talk us through it. What is guaranteed future value?
Well, GFV stands for guaranteed future value. In Mazda terms, it's Mazda Assured, which is the product that we call it. But it basically means how it's said, guaranteed future value. It guarantees the value in the future. So it can be over a certain few different terms. And what it does, it allows a whole different aspect in car buying for you to be able to buy a car more often. By buying the car, it goes to a guaranteed future value over a 4-year term. You know exactly what your car's worth, and the way it's promoted in that 4 years, that your car's worth 25 grand, or you could go into the same car or the new model of what you got, trying to keep the payments the same as what they currently are. So that's basically the way it's an algorithm is done from the back end to work out what your car will be worth in that period of time, what your repayments would be on the similar value or the same value of what you currently got, so you can keep turning over your cars, same repayments, new car more often is the line that goes with it. So
it's pretty cool.
It is good, and it's been around for a little bit. Guaranteed future value. It's new with Mazda Assured, and gee, it's been successful for us. It's been a great thing. It gives a whole new element to borrowing money. But it gives the security of knowing what your car's worth, and gives you the option of thinking, you know what, that sounds a really good idea. I didn't think of buying my car and turning over every 4 years. That's a really good idea. How do I go about it? You know, so it's it's definitely a great thing.
I'm sure a lot of people are now thinking, well, am I eligible? Who is eligible for that?
Everyone's eligible for guaranteed future value. So there'll be some times, Taylor, where people will come in and say, I've heard about this guaranteed future value. How will it work? I want to change my car over every 2 years. And I might say to them, look, that might not suit for you. You know, there might be a time where we might say this isn't going to suit necessarily. We should be doing it over this size term or that size term. But everyone is eligible for it. So it doesn't matter how big the borrow. It doesn't matter on what sort of the car it is. It's available for anyone, and anybody's eligible for it. But I guess a lot of people don't know about it. A lot of people, when you say, oh, GFE, what's GFE mean, you know? And you explain it to them, then they get the concept and go, oh, wow. You know, and even me, after, doing this a long time, knowing more and more about it and what you can do and what advantages it gives and what options it delivers in an area where it gives you so much to think about is so amazing. It's really good.
So you were just saying before that it might not suit everyone. So how does someone know if it is right for them?
Well, when I say it might not suit everyone, I think it does suit everyone, but there may be for us from a dealer, again, having your best interest at heart for responsible lending to say, it'll work, but I can save you a little bit of money doing it this way. Or, we could do it over a term that might suit a little bit better. Or it might be a case where you need to hold your cars for a longer period of time. So everyone is eligible for GFE, but sometimes there might be a better option there or an equivalent option depending on the circumstance where we might be able to offer something different. So again, it's one of those things where we're going to tailor to suit what works best, but 9 times out of 10, a GFE option will be the best option for people, especially if you're looking to get that new car regularly, And some people say, which is pretty common, this is my last car, I'm not buying another one. I'm not going to buy another. This one will see me until I'm done. Or, that have trading their 25-year-old Mazda onto a brand new Mazda, that aren't a finance option, that might say, that I don't need to borrow that amount of money, or might only want to borrow $5,000 or $10,000 of it. That wouldn't be a GFE option in that case there.
So I guess just a couple of questions to really break it down for people who are listening. So you offer GFE with every new car deal, is
Correct.
that right?
Correct.
Great. And you did touch on this before. Would you say it's the same as a balloon payment?
Yeah, it's very similar to your balloon payment, but offering on top of that is your value that goes with it.
Yeah, okay.
So you might be able to come in and borrow a 4-year finance term with a 30% balloon. This is the same option, but the other thing that we do on top of that is guarantee the future value of your car at the end of that 4-year period, and to give you options of what that looks like in 4 years' time. All right, so you've got not only the chance of a balloon payment or a residual payment, but then you get the benefit of actually guaranteeing it or locking it in over and sometimes can be a different market. You know what I mean? And this is I've seen this just recently with a car that's value came out, far more than what market value is on that car currently. which is great because it's guaranteed.
Yep.
The other side of that too, it's a minimum value. So your car may be a guaranteed future value at 20 grand in 4 years' time. The market might be what it currently is now. That 20 grand car might be worth 24 or 5 grand. So not only are you in a great position of knowledge knowing you got 20 grand covered, but it could be better than that again. So you've got another win at the end of your 4 year term. So if someone was to say to me that at the start of a 4 year term, I'd be pretty happy. I'd be pretty happy and confident.
That's really interesting that it isn't just you're going to get this price and that's that. If it is better, you do offer that. That's
guaranteed
awesome.
Minimum future value.
Awesome.
You know, you're putting the M in the GFE.
It does seem like a no-brainer, I guess.
Yeah, it just adds that option of security and confidence in that buying market where people may feel a little bit scared. And like I've said in previous podcasts, you know, that some people think, I don't want to buy a new car because I lose my money when I walk out the door. Or I should be buying a used car. And there's all these myth-busting that we've done over that. But here's another one to say, you know what, those people that have that lack of confidence, here's another confidence to say, we're going to guarantee your value in 4 years' time. We know we're not even there yet, but in 2026, I'm going to tell you your CX-5 is worth $35,000. You know, how good?
Yeah, it's pretty cool. I guess, how do you determine the GBF fee, sorry? how is that even, figured out?
The value?
Yes.
So the value is figured out again by an algorithm from a back end of what that car's worth by the predicted amount of kilometres. So you will nominate how many kilometres you do per year. So you might be a high K roller, you might be a low K roller. So we work that out over that period of time, and then working it back through trade value and history, what your car would be worth at that period of time. So not an underestimated figure, a figure that's very, very healthy in the market. So again, these are calculations that you could potentially do yourself, but have you allowed for that in your loan? Have you allowed for your interest? Have you allowed for everything else? Probably not. And that's not something you look at when you're borrowing a car and thinking, what's my car going to be worth with interest in 4 years' time? These are all calculated for you. And you can check on that at any point, knowing where you're at your loan, and keep an idea on the market. But again, you think, okay, well, I'm 3 years into my term. I've got 1 more year to go. You know, we've got an addition to the family. I might want to go bigger than my Mazda 3 to a CX-5 or to a CX-8. And then you can start asking the question then, what's my car worth, as opposed to what's a trade-in worth now with this against this car as opposed to this against my CX-5. So yeah, there's a lot of different options there for you, that's for sure.
I'm sure that it does all just sound very positive, and yeah, a bit of a no-brainer, as I mentioned before. What is the catch?
There's no catch. In fact, it gets better. During that period of time, we check in over your 4 year term. You know, if it's a 4 year term, we'll check in multiple times during that time. Check in after 12 months, see how everything's going. At 2 years, we'll check in again. And then at the 3 year mark, say, right, Taylor, this is how much your car's worth. And we start talking then about the potential look at what to look at the end of year 4. Are you in the same position? Do you want me to work out quotes to go across? So we're really, it's a fantastic finance opportunity that's tailored to suit, but also the communication is very, very, the triggers are going the whole time to keep you up to speed of where you need to be in your finance and giving you options sometimes you wouldn't have thought about. And, you know, if you get that little reminder 12 months out that you could be in a position where you could go to an upgraded model, you could go to a bigger car, you might want to change and go to a BT50, you can start looking at, 12, 18 months out. So good. It's so good. So there are no downfalls to it.
Yeah, that's pretty cool. And I guess it's really great to have that ongoing communication so that you do know your options, because I'm sure a lot of people just would not even think what they could be doing.
The normal thing, I hate the term, but set and forget is what people generally do. They buy a car and they think, I don't need to worry about it again, and probably don't want to either. That's our job. Our job is, those triggers that are automated back through the dealership where we're checking in, because we're part of that life cycle. So we want those cars back. We're in the business of selling new cars and used cars. So we want to see that used car come back in 4 years' time or 3 years' time or 2 years' time, because that's our livelihood as well, So the transparency and communication is in there that this is what we're going to do along the journey. And we work it out over that life cycle of how often do you want to be turning your car over. And I guess this goes back to the start of the transaction time of buying the car. Is how often do you want to be turning this over? Is this something you do every 12 months? Is it every 5 years? You might say that to someone, you're looking to turn it over, and they say, oh no, look, this is my first car in 30 years, But that's because they haven't been helped how to buy a car and how it's going to best suit them. What will be the best way to do it? How do I keep turning it over where I'm comfortable at $150 a week, and if I said to them every 3 years I'm going to turn you over and you're never going to pay more than $150, but you're going to have a brand new car in every 3 years' time or every 2 years' time, It'd be good, wouldn't it?
Yeah, that is pretty cool. And I'm thinking now, I've had my current car for 10 years. So it's really like, why have I not been doing this sooner?
Well, the education piece hasn't been there for one, for buyers. The flexibility hasn't been there. We've gone through that period with banks and financiers over the period where there was so much uncertainty, and there was the big gaps between one to the other. There was a big advantage to some people and not the rest, but this gives an option which is very fair and reasonable to everyone, but really bespoke financing options for you to get the best that's going to suit you. And that's the beauty that I love the most is you don't like to be put in the bucket of one size fits all. You like to have your individuality, and I think this allows for people and their driving lifestyle to suit them the best. And also people that are like myself, I'm a bit of a planner. I like everything to be structured and known, and I don't like that uncertainty floating, so this takes away that uncertainty, doesn't it?
Yeah, it does. It's really reassuring that you guys do offer it. Well, thank you, Luke. I feel a lot of confidence now going into my new car. I know that I've got this guaranteed future value on mine, so it's just given me a lot of confidence, and I'm sure a lot of people at home are also thinking, hey Luke, can you help me out? I'm really interested in looking into this.
Would love to, because it's something that that you may not think is possible, but it's that easy. And and when we talk about it, like you said, what's the catch? There is none. It is that easy. It's something where we give options over a different period of time, securing the value at the other end, and just giving you that confidence, not only in car buying, but the whole thing together. And car buying is one thing, but tying in all your insurance and your finance and everything else all together, this takes away that and guarantees it in 4 years' time, and we look after the transaction from then and look after it for you to make sure that we've got the right thing covered for you.
Yeah, it just sounds awesome.
It's very good.
Thanks, Luke.
My pleasure. Well, that was an excellent episode of Guaranteed Future Value, and so much to learn. And I guess the benefits are going to be different for every person. So to learn more about it and to understand the ins and outs, if you want to get in contact with the team and find out more, or just get a better understanding of Guaranteed Future Value or Mazda Assured, follow the links in the description below.